Hello and welcome to the Cryptocurrency News channel. Now, we're going to actually look at why Q4, why Bitcoin could actually run up to 100K next month. And for those of you that don't know, there are a lot of mainstream financial pundits and analysts, and even people with some know-how on the inside, not saying they have complete insider information because no one knows that. Gary Gensler did not say he would actually accept a Bitcoin ETF. But some people with a little bit of knowledge on the inside say that it is likely that Digital Asset Group or Grayscale's ETF could be approved next month. Now, that alone could possibly push Bitcoin up to 100,000. Now, some of you are saying, well, the Canadian ETF got passed last month and it didn't go up any. So what gives? Well, it's Canada, first of all. I mean, it's not the United States. The Canadian economy is nowhere near what the United States is, and the amount of disposable money between the two countries is not even comparable. So an ETF is an exchange-traded fund, and the most important part about an ETF is that it allows asset risk exposure for big institutions that can't directly buy Bitcoin. And here's why. An ETF is fully regulated by the SEC. Whereas Bitcoin itself is not. Because Bitcoin itself is not fully regulated, big institutions like Fidelity and BlackRock cannot actually buy it. However, an ETF is different. You might say, well, doesn't the Bitcoin ETF depend on Bitcoin price? Yeah, sure. But the thing is, because that ETF is fully regulated by the SEC, big institutions, retirement and pension funds like Fidelity, like BlackRock, can actually buy Bitcoin ETFs. And that's actually why a lot of institutions actually go through Grayscale instead of buying BTC directly. They are allowed, I think Grayscale funds is regulated. So they're actually allowed to buy Grayscale funds, but they're not allowed to buy Bitcoin directly. That's why a lot of them are actually going through funds. Now, Grayscale is allowed to buy Bitcoin because it's not a public fund. It's not a pension fund. It's actually a private fund. So they can buy whatever the hell they want. But like pension funds, retirement funds, like Fidelity, like BlackRock, don't have the freedom to do that. They have to buy fully regulated products, which is why an ETF is so important. Fidelity owns about $7 trillion worth of assets. BlackRock is probably fairly similar, maybe even slightly bigger. Even if they delve only 1% of their portfolio, which is $70 billion into crypto, and even if they bleed it over a month or two, that would actually have enough pressure to push Bitcoin way up. If they put like 5% into crypto, which I think like iTrust Capital allows you to do, but iTrust Capital is like pretty tiny compared to BlackRock and Fidelity. If they do like 5%, we could push up way, way past $100,000. The demand generated by BlackRock and Fidelity, even at 1%, would be massively enormous. It'd be greater than almost anything we've ever seen. So that by itself can push it up to 100K. And the thing is, once people see that BlackRock actually is getting in, other companies other smaller companies will actually jump in too, and retail people will FOMO in. So that could easily push us up to 100K if the ETF passes next month. Obviously, I think the euphoria will actually last a while before we start dropping. And I think it will actually last until the end of the year. And I think early next year we'll actually have a drop if this happens. Now, I'll make a video later explaining why I think it'll actually drop next year if this actually happens. But the thing is, because Fidelity and BlackRock can only buy SEC regulated products, and that's why regulations are so important, because these big funds with trillions of dollars can't actually directly buy Bitcoin, but they can buy an ETF. The passage of an ETF could represent inflows of tens of billions, if not hundreds of billions of dollars directly into Bitcoin, which will also lift all the altcoins up. And the thing is, Grayscale not only has Bitcoin funds, it also has Ethereum fund, it also has Cardano fund, it also has all these other funds that have large caps and small caps in their fund. So it will directly affect a lot of other stuff. It's basically the same thing as these big institutions like Fidelity and BlackRock buying BTC, but they're just buying exposure risk to BTC via a third-party product because they're allowed to buy exposure risk via a third-party product. And that's why an ETF is so important. It'll be like euphoria for a while, but the Bitcoin price will actually stay much higher than what it is right now. So that's what I have to say, and that's what I have to say for today. That's why an ETF is so important. And that's why, like, I really, really would want one to get passed next month. Because if one actually gets passed, even if it doesn't, even if the the creep up doesn't start immediately, you can bet within a few months that will actually start coming up. I know that Fidelity and BlackRock are just on the sidelines waiting to get in. Many of BlackRock's executives have said very, very good things about Bitcoin, and Fidelity has actually done digital asset courses. So both these institutions are very, very interested in cryptocurrencies, and they're just waiting on the sidelines for a chance to pounce on it. Right now, they can't because of laws and regulations, but an ETF would go around a lot of that stuff, and then they could actually get in, resulting in a massive move for cryptocurrency. So that's how it can actually come next month. Let me know what you think, like and subscribe, and hit that bell notifications button. Thank you, and have a nice day.